everybody, and welcome to Global One Media Stocks to Watch. We have smart investments in Web3 development in focus today. Maybe you want access to DeFi and blockchain projects, but you want to invest in them passively and using fiat. Well, I'm your host, Michelle Martin, and today we meet Singapore-based TradeTogether. Joining me is Geoff Ira. He's co-founder and CEO at TradeTogether. They're in the business of helping investors gain access to smart Web3 development. We're going to unpack that. We're also going to talk about the yields, how returns are made, and opportunities in the field of tokens. Geoff Ira, great to see you. How are you?
Great to see you. I'm pretty good. Thank you so much, Michelle, for having me here.
Thank you for joining us. Now, help us understand TradeTogether, what you do, and what makes you unique. First up, Geoff, maybe you can unpack how you provide access to smart Web3 development. What does that really mean?
Yeah, sure. So giving you access to smart Web3 development is basically helping you to invest in Web3 safely and to grow your wealth safely. So to do that, there are a few parameters. First of all, we need to do some risk assessment on the layer 1, layer 2. So basically the blockchain or the platform where we operate. And number 2, we have to select the right digital asset. We have to look at the right smart contract to make sure that there is no vulnerability. And maybe I should have started by this in first place. We have to be compliant. And that's what we did since the inception of TradeTogether, to comply with the rules in the country where we operate. We are in Singapore, and that's what we do since day one.
And what opportunities in the field of tokens do you provide investors?
Yeah, of course. So when we started back in 2021, we love to propose a basket of cryptocurrencies to basically fit with the risk tolerance and risk appetite of our clients. And at that time, the market, when it comes to do tokenization and digital bonds, was really premature, very narrow. So we like to work at that time with the stable coins, which we still do today. And now we have much more transparency in the world of DeFi and digital bonds. And that's really where we drive most of our customers today here.
All right. So you mentioned that, things were in their infancy, maybe back in 2021 when you first, appeared on the scene here in Singapore. So in terms of investors that you are now attracting, what sort of investors should look to your platform? Can you talk about the risk profiles that you cater to now?
Yeah, of course. So the DNA of our service is really to propose a curated solution to accredited investors. That's number one. Then to business, corporate, FI. And then ultimately, we can serve indirectly retail so long as a large corporate may offer such service. But we don't directly offer a service to retail customers today. So for that, we need to go through a KYC process to make sure that you are eligible to our service, and then we are more than happy to serve you.
Okay, so it's accredited investors.
Yeah.
And what should they know about why they should pick you over your competitors?
Yeah, of course. So I would say, first of all, beyond the fact to be compliant, we have a good track record today, seeing the 2021 all-time high and collapse, 2022 with all the obstacle difficulties to stay polite. You know that we've seen so many entities collapsing on the crypto exchange side, stablecoin side. So we've been able to really navigate and escape for most of the hits. And I think this gives us a lot of background, experience, and I would say assessment, the right assessment when it comes to select the right protocol. So compared to someone who started last year or this year, I think we have a good experience.
An experience management team, then always an asset. Now, you provide an alternative method for people to invest in crypto. I remember talking about this with you back in 2021. Tell us about whether that's expanded and also how you mitigate volatility for investors in this day and age.
Yeah, of course. So when we started our journey, the DNA of offering our service to our client was really to propose some stabilized type of return and to mitigate the volatility. You're absolutely right, Michel. So the way we did it first was to have a form of money market fund, but in Web3. So if you look at the money market fund in traditional finance, you're going to have USD or the traditional type of currencies investing in bonds. So we've tried to replicate the same experience in Web3 at that time, using qualitative stablecoin and investing in a curated DeFi platform. So this was really the DNA to allow our customers not to be subject to big market drop and market volatility. We did also that, Michel, because at that time, the market for option to hedge yourself against the risk was extremely narrow, infant, exactly to use your word. Today, it is much better. We have more maturity in the market, more sophistication, so we can bring our customers to a new type of asset class. And the word tokenization is extremely fashion today, but it is true that there is so many types of transparency that we can provide to our customers today, which definitely makes a difference. So I would say that it's a natural evolution, taking into account also lots of lessons learned of 2022, 2021, and bringing, I would say, the best of Web2, traditional finance in Web3, and that's pretty exciting.
Yeah, well, can you elaborate a little? How do you hedge, or can you share with us some details on your pocket fund strategies?
Yeah, of course. So I would say the first way to hedge ourselves, let's say, against the number one asset, Bitcoin. So if you are a sophisticated trader, you will go by yourself to use some option to prevent against a drop. So maybe you're going to use some call or put option, but everyone is not sophisticated traders, and everyone has to go with their own life. So that's why we told ourselves, okay, everyone wants to have a Bitcoin ETF. Good. It will open up more avenue for Bitcoin. Very great. But what happened if Bitcoin drops like yesterday night? Because there was a fake information displayed into the market saying that there is a new Bitcoin ETF. So that's where we told ourselves, okay, let's combine at the same time this notion of Bitcoin ETF, where our clients can get the upside, but if it drops, we can prevent this risk based on their risk tolerance and risk appetite. So if our clients have really like low risk appetite and they want to have a bit of exposure, we're going to hedge them using some option, and we can use another part of their asset into treasury bonds. So it gives a little bit of I would say, middle ground, so that they get appreciation and they are not too affected by market drop.
I must share with our viewers that Geoff has a background in TradeFi, traditional finance. So I think that's also a key difference in terms of talking about, your approach when it comes to trading strategies. Would you say that your background has impacted, how you read markets and how you plan ahead?
Yes, that's for sure. I would say I started my career in 2008, which is a fantastic year to kickstart your career in finance. Challenging, and I had the opportunity to face directly the situation of a financial market meltdown, with clients affected by the downturns and the plus 10%, minus 10% of the S&P 500 and the Dow Jones at that time, and most of our clients at that time had their portfolio extremely affected, because my previous employer just acquired a portfolio which was really in the red. And my first job was, first of all, to convince this client to stay with us, and number two, to provide them some reallocation, fund allocation. And I think it has really stayed in my experience of how to help my customers to bring them to something more sustainable in terms of portfolio, and more agile for them to be back into the green. So I think 15 years later, when we started TradeTogether, that was still the same DNA: how to offer a safe avenue in Web3 while mitigating the risk of market drop down on top of the other risk that exist in Web3.
Yeah, really fascinating lived experience you've had. I wonder if you can share, I don't know if you can tell us this, but how often you rebalance portfolios over at TradeTogether?
Yeah, so it will depend on the product. I will say for the first generation of funds that we launched with our basket strategies, 2021 until quarter one, quarter two, we could change every 2 weeks. Every 2 weeks, which is not, it's not day trading. Yeah. Today, since we are moving more and more in the form of digital bonds, where the maturity period is more scheduled, we don't have the need to do such type of frequency, except if some of our clients are asking us specific needs. They have specific needs on their portfolio, which is what we call separately managed account. But apart from that, in average, it will be once a month, and sometimes once every 3 months, depending on the structure of our product.
Once a month or once every 3 months. Got
Yes.
it. You have a great app that investors can use. Tell us about how it offers transparency and it gives investors, like, I suppose, real ease of access to your platform and their investments. Can you outline in general terms sort of the steps investors can take when they want to invest with your platform?
Of course, so the first thing that we are asking our clients to come in, when they come in, is to do their risk profile. So that it is the best way for us to sell them, and that's the robo-advisory part of our solution, where we will be able to determine whether they are they have more appetite for the risk or not. Then from there, we're going to check whether they are eligible for the notion of accredited investors, if they are individual or corporate and FI. And then we will drive them based on their risk appetite to the option that we offer, from low to high risk. In 2021, what we did was to establish a risk scoring for each of our products upfront. Okay, so the sociology of our client is really someone who has already invested in securities, in bonds, who's pretty familiar with real estate investment, but who doesn't want to do anything more as what he did in the past, which I totally understand. So when they select a specific product, they don't want to take care of their custody wallet, cold wallet. They don't want to think about, okay, what's the additional cybersecurity type of controls that I should take into account. They leave that to us. And then once the KYC is done, they have their mobile app that we propose, the TradeTogether mobile app, and they can see and monitor. And if they want to redeem their funds, it's a 48 hours redemption, and we send back in fiat. They send us in fiat, and we send back in fiat. We can also send in digital assets.
I just love the transparency and the ease there. You invest in fiat and you can redeem in fiat as well. It makes a lot of sense. Yeah. We talked a little while earlier about fake news and how that led to volatility in terms of Bitcoin prices, a lot of panicked investors. But given your experience in the industry, it sounds like with the accredited investors and the ease of investing on your platform, that TradeTogether is for people who believe in the long story of cryptocurrency, in the long-term potential of it. But help us understand how you see DeFi shaping up in the context of that, long potential of cryptocurrency.
Yeah, so I would say DeFi is now turning to a real. So I think there is a triggering point now for DeFi, which is tokenization. Yeah. And I'm telling you this because if you look backward, 2021, even 2020, and you take a look at the DeFi platforms, the very first ones that we could invest in. We have constantly had some difficulties to establish and to determine all our risk criteria. I'm referring to credit risk, market risk, liquidity risk. I don't want to go into a tunnel here, but it was extremely difficult to really assess and to determine the full spectrum of our risk with such a platform. Not only because it was hidden, but also because it was the very first platform, and the sense of transparency, the sense of information available was really difficult to determine. Yeah. And because of a lot of difficulties that some of the DeFi platforms have experienced in 2022, if you look at Celsius, we can be generous in this example. It has created a lot of uncertainty. First of all, for the market, it has affected the whole industry, and for players like us coming from the Web2 and traditional finance, I think we have tried to look at not coming back to our comfort zone, but just trying to import what used to work well in Web2 and to bring that in Web3. And it is fascinating to see that today, my counterpart I used to investigate with lots of DeFi platforms, it was maybe 80% of my time. And today I spend 80% of my time almost with regulated entity, regulated financial institution. In 2021, it was not the darknet, but it was not that far.
So it's interesting that DeFi actually requires now the regulators playing a key role.
That's from our personal lens at TradeTogether. You have hardcore DeFi players who really wants to do their own type of business, their own type of going outside of the regulatory space, trying, testing new type of ideas. But we do think at TradeTogether that it is much better when it comes to look for qualitative stablecoin, to look for qualitative digital bonds and qualitative protocol, to have a form of regulatory. And again, so one could say, yeah, but how about FTX? FTX was regulated. I'm not talking about crypto exchange here. I'm talking really about how do you generate a transparent yield to your digital wallet so that you have a clear yield with a coupon or coming here. It is transparent and you can really have this traceability, which has been always difficult in the traditional DeFi model 2021 version. Yeah.
So you're all about transparency, traceability. I appreciate you sharing your personal insights with me. In fact, that's something that you've done with me over the years. How important is it for you to continue to be open with investors? This is a channel for investor communication. How important in the DNA of TradeTogether is being open with investors? Yeah.
I think that's key to be open with investors, and we are trying to communicate always on that. Our revised website will go to that direction to be even more and more transparent. And I think the fact to associate with regulated entities and we are somehow trying to bring a bit of education to huge entities which have 100 years of experience in Web2, but 6 months of experience in Web3. And we tell them, guys, if you are coming here, this idea of generating yield from a digital wallet is not dead. It's just that the first generation was not really I'm looking for the word. It was not achieved properly, the UX UI experience. But now this is our opportunity. That's our opportunity to bring what lots of clients want, and even retail customers, because on the long run, the end game is also to serve retail customers properly. Want to have this transparent yield, and what's the best possibility to do that is to leverage on a huge and heavy financial institution capable to provide that, to be one part of this cycle, this supply chain.
Okay, someone watching this might be a prospective investor in TradeTogether, a prospective accredited investor. What do you want that investor to know?
Yeah, thanks for asking that. I think if depending of your age, in some part of the world, and I think it's in Asia, you have some countries where the interest rates are extremely high. So I guess it's not a secret. I'm French. In France, during the 80s, a large generation of middle class used to have this bank account, very manual bank account paper linked to the interest rate of the French debt that used to generate 8%. Yeah, but the inflation was also pretty high. But thanks to this, it has allowed a large part of the middle class to get more wealth to one day buy and purchase a house. Yeah, so I think that today the new version of the digital wallet, you have a mass in Asia, in Europe, in US, and also in countries where the banking industry is not that developed, who are willing to also have stablecoin generating yield, transparent one, and to accumulate. Because if you look at your bank account, traditional bank account today, it gives you maybe 2.88, maybe. That's and I'm generous here. And I think that's the logic. That's the logic of the evolution of finance, and that's what we do at TradeTogether, trying to help our customers to have access to this. We started with accredited investors. We are doing this in business to customers, and we are proud to be a pioneer in what we call a Web3 wealth management. And join us. Don't hesitate to contact me.
I love that analogy of, lifting everybody up together in that piece of French history, Geoff. Really appreciate that. He's co-founder and CEO of TradeTogether, Geoff Ira, talking about how his company is helping investors gain access to Web3. I'm Michelle Martin. Thank you so much for joining us here.
Thank you, Michelle. So it was a pleasure.
Thank you, Geoff. Oh, it was great. Great speaking with you as always.